So you know about cash dividends, and the next type of dividend we talk about are stock dividends. The important thing to remember about stock dividends is that they are stock dividends. There's no cash involved, no cash at all. So when you are told there is a stock dividend, you just know that no journal entry having anything to do with that has anything to do with cash. Okay, so what's a stock dividend? The company has so many shares outstanding, and what it does is it'll say, well, we'll do a 10% stock dividend. We will distribute an additional, 10% to each shareholder. So that's how a stock dividend is set up. It operates about the same as a cash dividend in terms of the board of directors has to declare it. So we have a declaration date for stock dividends. We also have a date of record. Stockholders who own stock on the date of record will receive more stock in the form of a stock dividend. And then they have the issue date. It's not a payment date, it's an issue date, because they will issue additional shares of stock to each of their stockholders. So various reasons that the company might want to do this. They may want to give some sort of dividend to their stockholders, but they may not want to do cash right now for a variety of reasons. They may not have cash. They may have other plans for their cash. So a stock dividend gives the stockholders, something. And generally it's a good deal for them because they have more shares of stock and they end up, coming out better in the long run. I guess, stock dividends are not taxable to the stockholders, where cash dividends are taxable. And then the company might want to increase its permanent capital. And what that does is it gets it reduces the retained earnings, which stockholders tend to think is available for dividends, and it puts it into the permanent capital of the company. And I'll do a separate podcast on that. So right now I want to focus on how the stock dividend works. So we sort this out a little bit. The company has 1,000 shares of $2 par common stock outstanding. And on October 1st, they declare a 5% stock dividend to be issued November 1st to stockholders of record on October 15th. And that seems like a lot, but you just sort it out a little bit. First of all, you have the date of record, which is October 15th. The declaration date is October 1st. So on the declaration date, we're going to make a journal entry, and it's going to be called, so October 1st, this is when it becomes a stock dividend. So we would say stock dividends, because that's what it is. And then we would do common stock dividend distributable. Did I mention that the account names in this chapter are absurdly long? This very quickly gets shortened to CSDD, and that's okay on an exam. CSDD, Common Stock Dividend Distributable. There will usually be some paid in capital in excess of par. On your common stock. And so that's those would be the accounts that would be used when the dividend is declared. On the date of record, there would be a memo. And then on the issue date, when the stock is actually issued, which is 11/1, we would simply reduce the common stock dividend distributable and at that point in time we would issue the common stock. So common stock dividend distributable is not a liability account. It's a stockholders' equity account. And when we get to the reporting, to the stockholders' equity section, this would be reported immediately after common stock because it's going to turn into common stock very soon. So you would have your paid-in capital, preferred stock, then common stock, and then if there were one, it would be common stock dividend distributable. Not a liability, it's a stockholders' equity account. Okay, so the other thing you need to know about stock dividends is that they can be small or they can be large. And the accounting we're going to do in the chapter is mostly for the small stock dividends. I'll do a brief podcast on how to do large stock dividends. That's the kind of thing that could be an optional bonus question, but not, not on the exam itself. So small stock dividends are about 20 to 25% of the outstanding shares. 20 to 25% or less. Large are 20 to 25% or more of the shares outstanding. Okay, so when we're, I have a 4-step process to go through to come up with the right numbers for the stock dividends, and it really works out pretty well. The first thing you ask is it a small or large? Okay, and this one is small because it is 5%. That's a small stock dividend. A small stock dividend, we use the market value of the stock to value the transaction. For a large, we use the par or stated value to value the transaction. And we'll see what that means. So it's a small stock dividend, it's 5%. The next question we ask is, how many additional shares? So the number of additional shares. And so to compute that, we say, oh, okay, they've got 1,000 shares now. Okay, so right now they got 1,000. They're doing a 5% stock dividend, 5% more. So this times 0.05, that means they're going to be distributing an additional 50 shares of stock to each stockholder. Okay, now the third thing is, what is the value? And I just said where it's a small one, we're going to use the market value of the stock. So the value would be 50 shares times the market value, which, did I neglect? I did. I neglected to write down the market value. It says the market value is $8 a share. Okay? Let me write that somewhere. The market value per share is $8. Okay, so we go 50 shares times the $8 per share market value. So the total value of this stock dividend would be $400. Number 4, we have to allocate between between the common stock, how much of this do we allocate to common stock, and how much of it is paid in capital in excess of par value on the common stock. Okay, in other words, right here. So the common stock, we're doing 50 shares, so it would be 50 shares times the par value, which is $2. So 100, okay, times the $2 par would equal $100. And then the rest of it would go to additional paid-in capital. And this gives you all of the information you need to fill out the journal entries. So on 10-1, stock dividends, what's the value of the stock dividend? Well, it's going to be $400. Okay, this is a little too close here, but common stock dividend distributable, the amount of common stock that's going to get distributed will be the 100, and then the rest is paid in capital in excess of par value. Okay? Then, when we actually distribute or issue the stock, you simply, here's the distributable, this is how much we're going to distribute, now we're distributing it, so we're going to reduce that, and we will issue the stock. Okay? So these 4 steps work out very nicely in arriving at what you need to do for the journal entries. And common stock dividend distributable can be common stock dividend distributable. I'll know what that means. The paid in capital, you can go paid in capital in excess of par, or stated, you have to say which it is, on common stock or preferred stock. So you can shorten things out a little bit. Okay, all right, so that's our small stock dividends.